Is it possible that there could be so much euphoria that two major, potentially historic events occurred in a short period of time and neither had any effect on the stock market? Could we be living in a time where we achieve a permanently high plateau? Has the Federal Reserve really finally figured out the secret that by printing lots of money, stocks will never fall? Wouldn't that be fantastic? Well, you came here for the truth, so let me unveil that for you. Today we are going to talk about what is guaranteed. We are told time and time again that if you take this action, this is going to be the result, and that's really full pockets. But ultimately, there are only two things in this life that are guaranteed. You know the old saying, I don't need to say it. Let's talk about what's going on in the stock market today. I've got some stocks like Tesla and Amazon and so many others to discuss. Let's begin by taking a look at the markets themselves. The Dow Jones rocketed higher today, 483 points. The Nasdaq didn't look so good because of what happened with Tesla. We'll talk about that in a second. I'm sure you're already aware anyway, but you can see what has occurred every day. The stock market has been looking good over the last few simply because right at the open, it shoots up higher and remains there for the rest of the day. No need for the plunge protection team this time around. These are the European stock markets, and you can just see the direction in which they have headed over the last 3 trading sessions, going along with what we're seeing around the world. And if we want to know, should we be buying stocks? Should we be selling stocks? Of course, all we got to do is go to a search engine, just like we did previously. Should I? And you will see buy Tesla stock is the first option. And towards the bottom, you actually see, should I invest in Tesla? Now, if I type in just 4 extra letters to make it, should I sell? The very first thing is, should I sell Tesla stock? And then the next one is, should I sell my Tesla stock? Amazon is also on here. Apple is also on here. So you can see where people are getting their frame of mind. Tell me how crazy this is, because these people are putting a lot into this, at least for their own disposable income. Sure, you might have somebody who puts in $100 here or there into one stock or another, but these people in general have been putting more and more and more, and I will give you the proof of that in just a moment. But I wanted to show you this as a little bit of humor to get into some other topics. This right here shows you, it gives you a true example of what we're talking about with this euphoria. In this video, this girl right here on TikTok is basically teaching people how you can make money paying off your student debt. She's sitting there in class on her laptop, and you can see that she's purchased Microsoft, she's purchased Tesla stock, she's watching how they're going up and paying off her student debt as a result. It's so fantastic. She knows exactly what she's doing. Doesn't this sound a lot like what we've heard about in previous bubbles, where the shoe shine boys giving you tips on stocks? This is very worrisome. If anybody is not worried by this type of behavior, then we've got something going on, and it is just a dream world we are living in. Tesla shares crater 17%. They're worried about delays with the Model 3. They're always going to be able to point to one thing or another with these particular stocks, suggesting it's going to go up tomorrow, it's going to go down tomorrow, they're going to miss their revenue, they're going to miss their sales. We see this all the time. Stocks are always looking for an excuse to either go up or go down, and they always do so very dramatically. If you've noticed, they always overreact to news. Money Manager says she has a very high confidence about Tesla shares reaching $7,000 in the next 5 years. All you got to do is put your expectations all the way up, whatever the highest level is. If you want to be the one that gets interviewed by CNBC or so on, you have to exceed that, and you have to show a few numbers that don't really make any sense, put them on the page, publish them, and then you're going to get an interview from CNBC and others. This is the way it works. It is unbelievable, but today that's how crazy things are. We're seeing this all the time. This is a website called robintrack.net, and essentially we're looking at what Robinhood investors are doing with their money. And in this case here, it's a typical 7-share of Amazon type investor. They are following the trends, they don't know what's going on, they have no possible idea of all the ins and outs of economics, nothing about that. They simply look at what's in the news, they go to the search engine, should I buy Tesla stock? They read a couple articles, they read again on should I sell Tesla stock? They don't know what to do, and of course, they are just following a line like a good little sheep. And you could see on the chart right here, this just gives you an idea in this most recent run up as the stocks have been heading higher. So it breaks it down. I know the font is quite small, but right up here, that pink line is price and the green is the users holding, the number of users holding, and they track each other because basically as the price goes higher, you have more and more people buying the stock. And then the price starts to drop and then the users start selling the stock. So that old adage of buy low, sell high, do you remember that? Well, I'm not exactly sure that people are doing that. I think it's flipped up on top of its head sometimes. They seem to be buying high and selling even higher. Well, I think that's what they wish would happen, but it doesn't always work that way. That's the whole buy the dip strategy that's trying so desperately to happen today, where people see this little bit of a dip that takes place. So if the stock is rocketing higher, they see this little tiny dip downward, and that's their opportunity to seal the deal. I'm going to get some more shares. And then they find that it does go up somewhat because of share buybacks, because of quantitative easing, and so on. And then we have a little bit of an event and the stock comes down just a moment, and that's their opportunity to buy the dip. And this continues over and over and over again as long as everything stays the way it is. There comes a time in every cycle where that breaks, and there is a moment that nobody expects to happen. Some would refer to it as a black swan event, but it could be a normal credit cycle that encounters issues over time. It's just the way it is. Nobody knows how it ends. Nobody knows what those events will be. There's a lot of people out there who are willing to predict it on this date or that date. They've got all the answers. Unfortunately, always what I've seen is that they never come out accurate. I like to look at this, see it for what it is, report the information, and you do what you want with it. Casper IPO reflects investor sentiment towards money-losing companies. Look at what happened with Uber. Look at what happened with Lyft. You can see that in very few cases where you have Beyond Meat, for instance, that went so much higher after the IPO. A lot of them dipped down and unfortunately never recovered. We see this time and time again the way it works, and unfortunately for so many, they get caught up in the euphoria and they lose a lot of money. Ancestry to lay off 6% of its workforce because of a slowdown in the consumer DNA testing market. They also mentioned 23andMe down below, and I had talked about that as well. The reason I mentioned these here is nothing to do with these companies at all. I'm just showing you that there are so many different industries that are seeing a slowdown today. Peloton stock plummets after the company reports widening loss, slowing revenue. So apparently $3,000 machines are not enough to get that revenue going. I'm not sure where the expectation is, but regardless, you could see what has happened with this particular company. Despite the premium pricing, despite all of the media buzz behind it, yes, any company can lose money. But also what I wanted to point out was that some companies lose money and the stock goes down as a result. Other companies lose money and people keep pouring their savings into it. I showed you this chart maybe a few days ago, but I wanted to touch on something else with it. The share of equities owned by the bottom 90% has been counter-cyclical. And there's something interesting here. Now take a look at the green line. This is the share of household equities and mutual funds owned by the bottom 90%. You see the gray shaded area, of course, that's the recessions. And look at this. When the S&P 500 is starting to come down, we see the bottom 90% of people, they start to buy right through the recession. They don't know what's happening here at this point. And then, of course, the institutional investors are buying it up when things are cheap, and the process repeats again and again. Now, that was just something that I thought was interesting because these are the non-sophisticated investors. We're not talking about corporations. We're talking about average individuals and what they are doing with their money. They're following the trends. They get into the heat. They see the euphoria. And, of course, they want to make a little money from their disposable income. It's understandable, totally understandable. Last year, Yahoo Finance reported that Amazon paid a shockingly low amount in federal taxes in 2018 on more than $11 billion in profits, $0. But this year, while the company said it had paid billions in taxes for the year 2019, in reality, it paid $162 million in federal income tax, an effective tax rate of 1.2% on over $13 billion in profits. They're deferring taxes here, and that is, of course, allowing them to push those profits off into future years. What I want to note from this is that the tax laws are designed where the mega corporations, not just any corporation, we're talking about the mega corporations, are able to own and control everything. The guy down the street who has the corner house with the nice car in the driveway, that's not what we're talking about here. Maybe he earns $200,000 a year. He's not the one that has any of these advantages that companies in the $1 trillion club have. It is completely different, and people need to acknowledge that. Interconnected with that, I found this article talking about Jeff Bezos. He sold $1.74 billion worth of shares. The stock took a dip as a result. But looking into it, it seems like, number one, the fact that the stock rose considerably over this period of time, selling $1.74 billion is actually quite small, at least in his terms. On an annual basis, he's selling $1 billion to fund Blue Origin, his spaceship company. And as far as I'm aware, this is part of a predefined sell that he was going to do. So there's always a little bit of hype and a lot of questions surrounding the activities of insiders, particularly at somebody at this level. But we should always do a little bit more digging before necessarily saying, oh my goodness, Jeff Bezos is selling, it's time to panic, he sees the top. I don't think in this case that's what that was. And realistically, I don't think you're going to see Jeff Bezos selling a lot of his stock regardless of what happens at the company. As soon as he starts to sell shares, if he were to sell billions and billions and billions consistently, that's going to topple the stock. It's going to create a big problem for them. So we've seen the trade issues back and forth. Apparently, all of that's good as of January 2020. Things are looking fantastic. Well, now apparently the tariffs are going to be halved on US goods. This is going to be beneficial, I think, ultimately for both sides. And it wouldn't surprise me to see a little bit of a pop in the stock market as a result because the tensions further easing and so on. We know that the real tensions underlying all of the activities that led up to the trade issues have not been resolved and probably cannot be resolved, at least for the near future. All of that is ignored. Well, don't worry about it because the phase one deal is signed into effect. This was interesting here. Goldman Sachs provided this chart. When you think about one country, you have to also analyze those countries that they deal with, and it might be for different reasons, of course. Whether that's for tourism, whether that's for trading materials, for services, it could be anything. China trade and tourism are very important for many of Asia's open economies. Look at the percentage of GDP. The darker blue area is the goods exports to China, and the lighter is tourism revenue from China. So goods exports to China for Malaysia is 17%. And in this particular case, for tourism revenue from China, you can see 1.5% of the GDP for Canada is coming from Chinese tourism. That's big, that's important. So if that particular country is having a problem, of course, it's going to impact others in different ways. And if people don't know the data, they're never going to understand it. That's why I really commend your efforts to look into data like this day in, day out. I know it's not fun. I know it's boring. I know it's not so fantastic like paying off your student debt while you're in the back of class, but you're here and I want to thank you for that. If you found this video informative, hit that thumbs up button. When you give me a like, you are supporting this channel, so I do appreciate that very much. If you want to learn about e-commerce, if you want to know how to sell stuff online, check out my free e-course that I created just for my subscribers. It's a step-by-step program, totally free, theamazongps.com. If you want to know about the foundation, the history of the asset classes, how to make money, reduce your debt, tax incentives, all of those details are located in these two books. Check it out at the link in the description if you want the audiobook, themoneygps.com. This is an extremely jam-packed video that I did. It covers so much, a lot of data in here. And if you haven't watched it, definitely don't waste your time. Click on it and I'll see you there.